What is happening, Derosa Insiders family? This is Matt Faircloth, and welcome to the Cash Flow Digest. Today's guest, guys, is someone who's been with us, one of our students for a while. And we like to really engage our students, get to know them a bit, get to know what businesses that they're running and, different directions of their companies. I remember I talked to him very early in our relationship as a coach and mentee. We talked about markets that they were going to be drilling into. So that's one thing we're going to talk about today is markets and land deals and all kinds of the fun stuff that this person's into. And you're even going to in for a treat. They're going to do a presentation, a mock presentation. I'd love to hear what you guys think of their business and give us honest, constructive feedback. Don't be just slamming them and tell them it was a good job, bad job. Tell us why, either way, because we're here to help people improve here as part of the Accelerator Program and here on this channel. So without further ado, let's bring in one of our students here, Hari Mann. How are you today, Hari?
I'm doing very well. Pleasure to be here.
Yeah, good to have you here, man. Good to have you here. So you're down in Florida, and as I recall in working with you, you and your team have some interesting stuff going on in Florida, but you're also expanding into one of the greatest, what I think to be rising star blue collar markets of the country. So when you and I started talking together as me as your mentor, we started talking about areas of focus, right? And yet you're Florida work. But then you guys put out a market that I thought to be very interesting, and we had a few talks about it. And it seems like there's some gravitation for you guys to pick that up as your focus point for the foreseeable future. What is that market, and what do you like about it? Like, why did you find it to begin with, and why are you still bullish on that market from this point forward?
So the market is Kansas City, which is in Kansas City, Missouri, or Kansas. We're more favorable on the Missouri side. But the reason we found that was because of your recommendation, just trying to, initially the kind of impetus for us finding a new place besides Florida at all was what you mentioned before, the insurance and interest rates and all of the growing reasons why Florida is a little bit harder to make good return as a real estate investor. So we started looking kind of everywhere in the nation and heard a lot of great things about the Midwest generally. And then myself personally, I think Kansas City is a great place, and it has, I'll get into some of the details as well, but it has great metrics going for it. But what we really liked in particular is that it's not somewhere that seems to have a really big spike in growth or a spike in terms of the negative retracement of prices. It's like a slow, steady, reliable city. So as our first target, I thought that was a really favorable place to go.
Love that. I mean, and guys, we're going to unpack Kansas City a lot more in Hari's presentation, so stay tuned on that. What I really want you guys to do is to pay attention to how Hari presents the market of Kansas City, because that's something we work with him on, and that's something we try and do as well, is really tell investors a lot about the market and about what makes it unique. And one thing that I wanted to just underscore that you just said, Hari, that I think is really interesting for anybody listening to hear again, is that this is not a hot sizzle spike market, right? This is not Austin, Texas. This is not Phoenix, Arizona. Those are not bad places to invest. It's just those are big spike markets. Those are markets that, because of a lot of tea leaves that are happening and speculation that people are making on continued job growth and continued popularity of those markets for people moving to them, that they're thinking it's a great place to invest. I'm not saying they're wrong or right about it, but that is a market. Those are markets that are, let's just say, in the top 5 targets of investors across the U.S. that they're targeting. Maybe they're wrong, maybe they're right. The problem there is you're going to be overpaying in dollars per square foot, in dollars per dollar, meaning like the dollars you put in to get dollars back in NOI on the back end. You're going to be paying a lot more than you would in another market. So if you're really trying to invest for cash flow, right, or invest for execution of business plan and not relying on market tailwinds to pull you along, market tailwinds make things easy. But if they're in your budget, and if you're counting on market tailwinds and they don't happen, you can end up left holding an empty sail, so to speak. I don't know if you want to comment on that, Hari. I know that you did a lot of research to choose Kansas City. Any thoughts there on big spike markets versus steady Eddie markets like KC?
I think personally, I've kind of experienced that a little bit with Florida, especially getting started around the prior to 2020 and then experiencing that rush and increase in prices and how that's kind of now stabilized or gone down a little bit. It's definitely like a feast and a famine type of cycle. And for some people, maybe that works really well with your strategy. So it's all, it's still a great place to invest. You can still do really good things there, depending on, what you want to do. But for myself, and for especially when I start thinking about handling investors' money, I like the reliability that comes with some of these markets that are kind of graduating to that bigger level. So that's why I really liked Kansas City.
Yeah. And Hari doesn't need Kansas City to turn into Austin for him to be successful. I mean, correct, Hari? I mean, I'm hoping you don't have that in your underwriting. You
No.
know, I'm hoping we've taught you that much that you're not going to be counting on a 20% rent spike anytime soon. Because a steady Eddie business model, 3 to 4% rent growth is just fine. That's enough to get you to the promised land. Okay, so tell us another thing I want to unpack here before you get into your presentation is that, and maybe it's your long-term goal, but currently you are not a full-time real estate investor. You're also holding down a day job, which many of our students and those listening here are doing that. How did you bridge it? How have you been able to maintain the day job and real estate investing? And, give us some guidance, maybe some tips even for those that are watching that are in that same boat. How do they hold down a job that they either need or a job that they love, one of the two, while they're also, diversifying their wealth by building up a real estate investing portfolio? How do you make it happen?
Yeah, I will say it's very difficult. So you're in for a challenge if you want to go that route, but it's not impossible. It's definitely feasible with the right kind of systems in place and the right mentalities that you can bring to the table yourself. And honestly, as I've been trying to do that, I discovered that the term overemployment is a thing nowadays, where some people will actually take multiple jobs that are all remote and stack up like 2-3 salaries on top of each other and make a killing that way, which that's great. And I didn't realize I was kind of doing that for my career as I was building my company here, as well as continuing to grow in my W-2. But that journey, it's definitely just like a personal growth and development, like accelerator to the max. So if you want that type of, drive and motivation and you have that ambition, it's feasible, but it'll definitely take a lot of investment.
It's got to be a lot in like calendar discipline, let's say, that some folks may be able to just enjoy a 1-hour lunch break from their day job, where Hari probably on his lunch break is out there looking at deals, surfing LoopNet, maybe calling back brokers, that kind of thing, right? Like this is probably an exercise in efficiency, I would think.
Yeah, certainly. Just finding the times where you have kind of lulls in your day and being able to exploit that for whatever your goal is. Yeah, absolutely.
Hari doesn't need a hobby. That's it. Like his hobby is real estate investing, I would think, right?
My hobby is going over the investment, private placement memorandums, subscription agreements, those kinds of things.
Let's hop in. I'll share your presentation here. By the way, love the name Midas Touch for your company. Great. You guys remember Midas, everything you touch turned to gold. Let's hope that's the same for Hari and his company, Midas Touch, that everything they touch turns to gold as well. Let's hold that as an intention for you guys. So I'm going to go ahead and share your screen now. I'm going to hop out in that so you can take us through your talk. So everybody give like some likes and hearts here for Hari to come in and tell us a bit about himself and his business.
All right. Thank you so much. Well, first of all, I just want to restate how much of a pleasure it is and an honor it is to be here to join you on your podcast. So today I'm going to be sharing a little bit of background on my business and myself and how I'm approaching building your future, well, my future, and hopefully some other people's future as well, achieving financial freedom via high quality commercial and real estate assets. So let's get into it here. I am Hari Mann, as I was very awesomely introduced by Matt here. I'm the founder and CEO of Midas Touch LLC, and we'll get into a little bit of history of the company. So we are family owned and operated and established in 2014 by my dad. He was the one who actually came up with the awesome name Midas Touch. So since then, we really actively got started investing in around 2016 after I graduated college in 2014 and caught the entrepreneurship bug. And since then, with the help of some private loans from my dad, we were able to grow to a total current assets under management of 2.4 million, which is awesome. And I'm happy to share details and the different strategies we were able to try out and a bunch of mistakes and lessons I learned along the way of being able to achieve that. And also I wanted to share or announce a big update for Midas Touch, which is a sale event that we decided to do this year. So in the past few months, we have kind of decided that our owners want to go a couple different directions. So as I kind of said, my dad started this business with the intention of creating generational wealth for himself, my two sisters, and I. So with me as the CEO and manager, I was able to grow over these past 8 years to what it is now. and they're going to execute a buyout for my stake so that I can use that capital to pursue syndication and entrepreneurship going forward. So a little bit about myself personally. I currently live in Atlanta, Georgia with my lovely wife, Jasmine, and my awesome puppy, Malai. I lived in Northern Virginia. That's where I'm from. That's where I was born and raised. And I've also lived in Long Island, New York for 4 years prior to moving here last year. I like to think that I've transformed from a procrastinator and kind of your average, uninteresting, boring kid slash, interested in just TV shows and video games and stuff in high school into an ambitious entrepreneur after finding my burning desire. And for that, I like to use the word burning desire in particular because the key turning point and milestone in my life that kind of made me start thinking that I could actually achieve success as an entrepreneur was reading the book Think and Grow Rich. So highly recommend that for everybody. Another thing that really kind of was shocking and transformative to me was a story that I like to share about how I first entered the workforce. So after graduating college in 2014, I started working as an IT consultant in the DC area, and I had 2 direct managers. Both of them, unfortunately, one of them had sleep apnea, and I know that because he talked about it and was open about it. But unfortunately, that meant he wasn't able to stay awake and do the daily functions of his job as well as I thought maybe another person could have or should be doing in his position. And I noticed that the client was very accommodating and forgiving, but wasn't really insistent on getting a better product. And that's all understandable. And then I feel for the situation that he was in. And that just made me want to not find myself in that similar kind of position, and also really motivated me to go into finding out how to do syndications, as well as just grow in my career and entrepreneurship in general. So going forward, briefly, I wanted to mention I'm going to be starting an MBA. So you see a photo of myself with Buzz, the Georgia Tech mascot there in the bottom left. I'm going to be starting that in about 2 weeks. So I'm excited to continue my education that way. And I intend to pursue syndication as the main reason for why I joined the Derosa Group, as well as eventually serial entrepreneurship. So looking at how I can acquire a business and do that in a repeated fashion. So that's a little bit about me. About our company, the majority of our portfolio, as I mentioned, was grown in Palm Coast, Florida. And we also have some experience in some of the other cities like Tampa, Jacksonville, and Tallahassee. And after we started doing tax deed investing, we were able to build up some really good vendor relationships there, especially with our realtor. So therefore, we kind of just doubled down on that area because we got good opportunities. And then they ended up kind of slowing down in 2023 and through currently as well because of some of the factors that Matt mentioned, the insurance and the interest rates being unfavorable in terms of the income and expense calculations that we do for our underwriting. So that led us to, before we switch to other places, this is a sampling of some of the deals that we have had in Palm Coast area. So the top left is we have 2 duplexes in that condo community, which is called European Village. It's just a nice little cute community with some shops underneath. Then the top right and bottom left images are properties we got through tax deed acquisitions or single family homes that are rented out for buy and hold right now. And then on the bottom right is a more recent acquisition of a condo that is also going to be a buy and hold for us. So switching context, we started looking at other places that would be feasible for us to do investing as well as grow our scale into syndications and multifamily. So we liked Kansas City in particular after kind of perusing the big markets you hear about in the Midwest, like Oklahoma City, really Midwest, but Philadelphia is kind of one of the areas we were looking at, Cleveland, Ohio. But anyways, we looked at some of these metrics here and we noticed that they're favorable for Kansas City. So the standard things such as job growth, appreciation, rent growth, and in particular, what we really liked about it was what I mentioned. It's slightly higher, but it's not crazy higher population growth. And over the past 10 or 15 years, it hasn't had a huge spike in value in terms of growth or decline. So that's nice that we like that steady kind of consistency. It does have those nice factors that you hear of the other big cities as well, a large growing economy, new companies coming in and establishing locations there, as well as some other interesting highlights. Like they've been really crushing it in the NFL with the championships there, as well as planned FIFA World Cup events and other investments that the city's making. In Kansas City, we've acquired 2 properties so far. We have half of this duplex on the left side, as well as this single-family home on the right, which this picture is pre our rehab. So hopefully it looks a little bit better now, but it's going to be a long-term hold, and we may potentially put that on the market so we can free up some capital for us to use in other investments. So real quick, I can't really see the comments here, but I have a trivia question. So I wanted to pause and share a little trivia question about Kansas City. So does anyone know Kansas City is called the city of blank and has over blank, which is a number, of them? Does anyone know what it is? The city of what?
Ooh. I got 3 guesses. And I'll jump in unless anybody watching here has, and nobody Googling it, right? I think like smoked meats, right? So I think cattle, right? So cattle or some kind of meat product, right? Pigs,
great barbecue there. Yeah, you're absolutely right.
Yeah, great barbecue. Okay. But I think I know this. I might have heard it somewhere. I'm going to guess the answer is Bridges.
Bridges. That's not a bad one.
Yeah. Fill in the blanks, everyone. Cool. All right, it's got. Let's see how many.
Well, maybe I can give you the number as a hint. Maybe that'll help narrow it down a bit. The number there, the answer for the number of these items is 200.
Well, there's 200 of these things.
200 or more.
Okay, or more. Certainly not cattle. I get quite a bit more of that. Okay, I'd go for Bridges or no idea. Oh no, tell us what is it?
All right, the answer is.
Tell us why.
Kansas City is the city of fountains.
Really?
Yes. Yeah, They have it on a lot of their signage, and yes. And actually, in another part of that fact is that they were mostly established actually for drinking, not for like beautification reasons. So people would go up there and drink from them themselves, and even like horses and pets and whatnot would drink from these fountains. So check that out. You can look that up.
Are all 200 fountains still? It has 200 today, or 200 more that are still intact.
I think that's today, but I'd have to double check that to be absolutely sure.
Yeah. No, that's crazy. That's interesting. Okay, guys. Well, fountains are fun, right? The ones that you're able to swim in and whatnot. Kids love it, right? So what a great public asset, public amenity fountains are. So that's, yet another, it's good to invest in cities that have a reinvestment in public assets. So that's really cool. Thank you for telling us that.
That's a very practical take on it. I was just going to say, if you like investing in fountains, call me.
Yeah, right. Oh, you could actually buy a fountain. It'd be great. You get.
We could install one. Maybe make it the 201st one. All right. So continuing on here, now we're going to switch to kind of the value that we got from the Derosa Accelerator and the main points that we thought were really important. So one of the first things that I wanted to start with was just marketing overall. So the value of marketing exposure and including calls to action has been really palpable for us as we started doing a lot of planning and releasing of different posts, articles, and we also got the recommendation to start doing videos of some of the core key value lessons, which the name actually was from Matt, called the Midas Minute, which I have a couple more on my to-do list to record soon. But we put that all in a social media schedule, as well as packaged some of those pieces up together into a monthly newsletter. So establishing those were really powerful in terms of getting more followers and getting traction and helping the goal of moving investors who we have our initial, CRM information for towards actually soft committing with us for an investment. And then actually, sorry, real quick, those are some samples of the quality of some of the things we were able to put out. And then the next slide is updates to our website. So with the mentorship that the Derosa Group helped us with, we had some audits of our website contents, and they recommended some visual improvements and inclusions of calls to action in more places. So that was really helpful. We also included an education section so we could help nurture people who get awareness of us through whatever social media posts we do, as to what we do in terms of where we're targeting, why multifamily is a good investment to make, so that once we get on calls with potential investors, hopefully they're basically already pre-decided on wanting to go forward with us. and of course an About Us page, which shared a history of our company as well as information about our employees. So the next really important piece was investor communication, and in particular, the structuring of how to make investor communication a consistent system. Because once you have your CRM contact info, you need to nourish that relationship and really build trust for them for any investor to actually give you their hard-earned capital. So we created a system to nurture our relationship with investors with templates, including an investment offer email, which is kind of the kickoff of our relationship journey, which would include a link to a offering memorandum, which we also had as a distinct document, which what we tried to do was create a kind of template version for ourselves with our branding and the graphs and picture placement and formatting built out so that we could go back in and just enter numbers and addresses to rapidly have an underwritten deal turned around to investors. And so theoretically, after somebody likes a deal, they would have to be onboarded into our financial management portal, which we decided to go with InvestNext for our structuring of our internal operations. So we also had a set of like 4 or 5 emails templated out for how that process would go, from signing documents to submitting the actual transfer of funds and confirming that, and then consistent communications during deal operation. And then another cool thing that I thought was a little bit novel, I'm not sure if anyone else has done this, but we wanted to make sure that we could show evidence to any potential auditor in the future that our investors, even if they were not accredited, were indeed sophisticated to comply with the SEC's laws. So we created a little document which basically was a compilation of some of our education materials as well as some deal specific information, which the investor would have to sign and attest to the fact that they read and understood those pieces of information. So we thought that would be a nice way to track that investors, even if they're not accredited, truly do understand what they're getting into, just for the sake of any additional protection from audits in the future. And then one of the most, I guess I'll say, hated but beloved tools that the Derosa Group offers is the underwriting tool. Hated because there's a lot of detailed information that you can put in there, but beloved because it spits out the most critical information, in my opinion, for building the case of why an investment is good or bad. So we heavily use this, and we really like that there's a summary versus the detailed pages where you can get a quick 15-minute go, no go, green light, red light kind of assessment of a property. And then also what we really liked about the details were that it helped serve as like an almost checklist for us as we looked at deals to make sure that we hit all the main categories that could exist for expenses. So it was good to have that thorough backup to assess deals with. And then we took that information and like the graphs and the IRR percentage, cash on cash returns, and included that in some of the communications I showed you before. Additionally, there were some other key points that we took away from our 90-day accelerator relationship with Matt, especially. The first one was that we honed in on just the one market area of Kansas City, and then that elimination of all the different kind of places we were looking at allowed us to really hone in and research why Kansas City in particular is a great city to invest in. And we created a specific pitch deck all about the city itself that we could present to potential investors, and a credibility packet for brokers, which included our own portfolio, as well as why we like the city of Kansas City in particular. And again, that's kind of its own point as well. The broker credibility packet itself was very helpful. We basically got comments from every broker that we talked to that the professionalism of the presentation and that broker credibility packet that we have was one of the main reasons they thought we were serious and wanted to continue working with us. So I highly recommend taking their advice and building a nice professional credibility packet that you can share. And then the recommendation to do a site visit, that was really critical to get familiarity with the location on a street to street basis, build relationships with brokers. And actually, funny story is we ended up being able to visit Kansas City in January, like January 13th or so of this year. And that was when they had like I don't know if it was the worst weather temperatures this season, but it was like -9 degrees Fahrenheit during our visit there. So that was a fun challenge to have to deal with. But regardless, it was a nice bonding experience for us and some of the brokers we visited, and we got to tour some places, which was really fun. The LOI template and kind of the templates in general for how to communicate with different people that you have to coordinate as you go through the syndication process. Just having that operational kind of assuredness and the process laid out was really helpful for us to get enough confidence to really pursue syndications honestly and feel like we could actually do it and produce the outcome that we intend. As I've been mentioning, accelerator resource access, especially I will say the access to the mentors when we're building these documents and reviewing them and even preparing for this webinar. I got a lot of great feedback from the team, and the webinar itself has been a really fun experience. One of the reasons I'm doing it is, as Matt mentioned, is to flex my own webinar delivery skills. So hopefully it turns out well, but if not, I'm happy to receive all the feedback and criticism that you guys have in the comments. And also just some valuable connections with the other students in the program. There's a handful of folks that I've built really good connections with and continue to talk about our ongoing, journeys of becoming syndication investors together. And even one of them, I've started a book club, and he's joined that, which is very fun. So if anyone's curious about joining my investor and entrepreneurship book club, let me know. We've done about 3 books so far. All right, next. Okay, yeah, I wanted to share a little bit of the impact of all of these tools and support that we got from the Derosa Accelerator. You can see all the different categories there kind of listed at the top of this graph. But we started with the program in November of 2023, and you can see that all those numbers continued to grow or spiked and started growing based on the marketing, especially that we implemented with the Derosa Group's help. So as I mentioned before, with the sale of the Midas Touch stake, my personal Midas Touch stake, we are now shifting these activities over to myself personally. So that's why this graph ends at April 2024. But I guess we could restart that for myself at that point. So we'll come back with an updated graph in our next webinar go round. How about and lastly, the final slide in my presentation is next milestones. So as I've said, completing the shift of all of these assets and procedures and the awesome learnings we had from the Derosa Accelerator to myself personally. So you'll see on the next page some ways I'm building for people to get in contact with me, and I'm just moving all of the documentation and procedures that we've built for Midas Touch to my own personal Google Drive and starting to implement those practices myself. And then what we found out was kind of the most difficult piece of succeeding as a syndication investor was the capital raising portion. So this past maybe month and a half or so, I have been really heavily focusing on my own personal marketing and sales skills and trying to grow my network, really hammering in on my calls to my personal network, as well as former colleagues and coworkers I've worked with, to hopefully get a pipeline of investors built out and nurtured. And ultimately, the goal would be to find a reasonable high net worth partner, somebody who fits my investing strategy and approach, to co-GP a deal with. So I'm not resting on my laurels until that occurs to send LOIs. So in the meantime, I'm continuing to send LOIs and keep my underwriting skills well maintained, as well as what I believe is that if you can find a good deal, then an investor will be that much more likely to actually commit, even if they're a little bit 50-50 on whether the time is right. If the deal's in hand, it's like what they say is the bird in the hand is worth 2 in the bush, right? So the final thing is to find and win more deals and then continue to do so in bigger and bigger fashion as I grow. So thank you all very much for your time. Again, I appreciate and really want to thank Matt and the team for having me here today. So these are a couple of different ways for you guys to get in contact with me. Feel free to scan that QR code to get to my newly created auto CRM tool. So if you share your information with me there, you'll get an email and a link to my Calendly, or you can just use that Linktree link and get access to all my links that way. So I'm happy to answer any questions now. Stay on for however long anyone has questions, or we can meet privately. And I'm always looking to grow and share my knowledge and potentially partner with other people. So please do reach out.
Can you rewind a few slides back to when all your social media activity and all that were flatlined like this, and then all of a sudden it does this? That's right. Can you, yeah. Let's unpack that a little bit. What do you attribute? So listen, awesome. I'd like to think that we did all that for you, but it's probably just advice we gave you and you implemented. So can you unpack that a little bit on about what happened and what, like, what this looked like, felt like, what you did and everything like that?
Yeah, absolutely. So can you guys see my mouse as well? I think so, right?
Yes.
Okay.
Yeah, I can.
So this one, I think LinkedIn is kind of the best example of the outcome we were able to get with your guys' help. But what we did was we basically had no presence besides our website prior to working with you all, and the website wasn't getting any traffic or anything either. So we started planning out different articles that we could create, and we published those on our website's blog as well as LinkedIn posts. So as we did that and started actually using our Midas Touch LinkedIn profile and blasted it out to our set of connections that we had before, that started taking off. And then we also supplemented that with a newsletter that went out monthly. So we took a collection of the email addresses that we had prior to launching the newsletter and put that into our newsletter CRM tool, and basically released about 4 newsletters over this period. And that plus the idea for the YouTube videos of the Midas minutes, I think all of those were the most impactful things. So all of those were suggestions and ideas from your team.
We'll take all the credit you'll give us on that. So, what have been the results of that? Right. And I get, newsletters, I want to like give some juice to the audience here about like why they should consider, things you just said, newsletters, social media posts, kind of developing a cool brand like Midas Minute, that kind of thing. What have been the results of that with regards to investor engagement, outreach? I don't know if you've done a big dollar raise just yet that we can actually really take all that for a test drive here. But what results have you seen so far from that hockey stick?
So I'm hoping to be able to do that big raise in very short order, basically as soon as I have a good deal in hand. So I'm sending a lot of LOIs.
Yep.
But the impact I've seen is that when I in social events or just when I have conversations in sales calls or when I'm reaching out to my personal network, they will already know. They'll like come into the conversation knowing that I've been doing real estate for years, and like maybe they'll have a question already or some ideas of what they want to do with their investment strategies or their capital. So I can feel that they're already getting into the type of thinking where they look at me as an authority on the subject matter, which is the first step to starting a relationship where they're trusting in my ability to
Yeah,
invest their capital. So
I
i've,
get it.
I've been feeling that.
It shortens the conversation a bit, doesn't it? Right? Like
Hmm.
in some ways, you feel like they've already had a conversation with you because they've read your newsletter. They've hopefully watched one or two of your Midas minutes and whatnot, and so they've gotten to know you a bit more. Which I found that to be a great result in doing a big branding campaign and everything like that. Yeah. Before we let you go here, like what's next for Midas Touch? What's like the next mountain you're climbing? Aside, get finding a deal in KC, 100%, right? Along with that, any other like big, hairy, audacious goals? Anything else you want to put out there that you as Midas Touch are working on that we should look out for you for over the next 6 months, 12 months?
No, I would say that's the biggest one. Besides that, personally, I'm working on my MBA, so I'm excited to implement all the learnings from that and use that to develop Midas Touch. Well, it won't be Midas Touch. I'll be exiting Midas Touch. It'll be my next business, but to develop that into the syndication operation firm that I want it to be, and then hopefully pursue serial entrepreneurship after that. So the first goal is a pretty big, hairy, audacious one already. Which I guess if I'm being specific, my intention for syndication is to grow a business that has a valuation of $50 million.
Oh,
So I'd say that's pretty big.
that is a very big, hairy, audacious goal. I love it. Guys, if you guys want to connect with Hari, if you guys maybe want to partner up or throw some leads or bird dogs Hari's way in Kansas City, if you guys want to learn more about land development, if you guys want to get a shoulder to cry on about you having to work a day job and also building up your real estate portfolio, or maybe relate to someone who's doing the same thing, for all those reasons and many more, reach out to Hari. There's Hari's LinkedIn, or that's his link tree right there. And that. But Hari, how else would people get a hold of you? We'll put that link. You guys have to copy that down. We'll put that link tree in the show notes in here on the broadcast. But how else, website, other contacts, should they get a hold of you, Hari?
Well, the link tree is the best one. And honestly, now that you mention it, I'm not sure if my LinkedIn is on my link tree. But that's the best way. I have my Calendly on there. I'd love to have a meeting.
Okay.
So I'd love to set some time with anybody. And I also live in Atlanta, so if anyone's local, we can grab a coffee or anything.
Love that. That's great. Okay, guys, reach out to Hari Mann to hear more about the future here, all the things that I mentioned and reasons why you guys could connect. Hari, we are very grateful to have you part of the Accelerator Plus program and looking forward to seeing what's next in your ventures and what you build on that hunk of land and what you're buying out there in KC. Lots of big things ahead of you, and looking forward to continue to contribute to your business as best Derosa can. So thank you for joining us on the Cash Flow Digest today.
Thank you very much. I appreciate it.
Cool. Good seeing you. Guys, that's exciting stuff. One more time to underscore, if you've got a growing real estate business, we are making some really major upgrades to our real estate education business. So why would you not consider joining the Derosa Multifamily Accelerator Program, or even Accelerator Plus, which is what Hari's a member of? You're going to get direct access to me and my team, direct access to office hours where you guys can come on a daily basis and pick the brains of the Derosa folks. There's 25 hours worth of education modules that are there to teach you everything you need to know. Literally, we just dumped everything we know about multifamily and put it in those modules, including things that Hari says he loves to hate, which is our underwriting tool, which, yes, it's very complex, but hey, underwriting is complex in that. So you guys get that along with many other things as part of our Accelerator program. We are even doing free webinars on a weekly basis, just giving a little bit of advice, but also teaching you a bit about what our Multifamily Accelerator program could offer and how it can help you get to the next level. So what are you waiting on? What are you waiting on right now, guys? Go to derosagroup.com/accelerator, book a call with us, jump onto one of our free calls to hear more about the program and have us give a bit of an insight into your business. Life's short. If you want to get somewhere in multifamily, sure, you can try and do it without a roadmap, without somebody watching over your six. You're going to get there a lot faster with a company like Derosa sitting at your side. So join us in the Derosa Multifamily Accelerator program right now by going to derosagroup.com/accelerator, and we will see you guys there.